Namaste, good morning, friends. We are continuing our understanding into trust, okay, the assessment of trust and how income is computed, etc. And then today's focus is going to be the income computation. Apart from income computation, we are also going to see the administrative provisions and the exit taxation of trust. Okay. As we go by, we keep asking ourselves questions and keep answering those questions. One of the questions now is, can a trust donate funds to another trust? Can a trust donate funds to another trust and claim it as application? That is nothing but utilization. Okay, so 85% we all know has to be utilized. Can a trust donate to another trust and claim it as application? The answer is yes. Donation to another trust will be treated as utilization provided the other trust is also registered under section 12. Okay, provided the other trust is, you cannot donate to an unregistered or private trust. You can donate to another public charitable trust which fulfills the registration requirements. Okay, and then yes, you can do that. Now, couple of years back, one amendment came which is now very valid, which is very important amendment. It is not for assessment. I mean, it is not in the Financial Act 19. It is in fact before FA 19, but it gets importance. What was happening, practically what was happening is, let us start, I am running a trust A and also there is a trust B. Both are registered, both are public charitable trust which enjoys exemption under section 11. A donation from trust A to trust B, is it allowed as utilization? Answer is yes, and I can claim it. So while donating, what I was doing is, I was donating with a specific direction that it will form the corpus of trust B. Repeating, I was donating, trust A was donating to trust B, saying that it will form part of corpus of trust B. So what was considered as utilization in my hands was not getting converted into income in the hands of the recipient. For me, it falls under utilization. For the recipient, it is going to corpus, so it is not an income. So the whole thing went untaxed. The whole thing went untaxed. Okay, you know, if you look at these people who are running trust, they will not run just one trust. It will be multiple trust. Okay, I know people who are running 30 trusts, 40 trusts. Okay, so the internal fund movement was very high. So came this provision. However, utilization will be considered only if the receiving trust treats it as income. In other ways, in other words, donation should not be towards the corpus fund of the receiving trust. Donation should not be towards the corpus fund of the receiving trust. Okay, it will be considered only if the receiving trust treats it as income. In other words, donation should not be towards the corpus fund of the receiving trust. So this was an important amendment. Any questions after that, they had this adjustment. Any questions after that, they had this adjustment. Either it is wordings will be there corpus fund, or you should write it is assumed that it was towards the corpus trust, so it is allowed. It's not towards the corpus. So we continue our practical understanding. I'm in question number 12, page number 18. I'm in question number 12, page number 18. Sri Venkateswara Memorial Trust running hospitals is registered under section 12A. Following particulars relevant to the previous year are furnished to enable you compute the tax liability. Income from running of the trust, donation received including anonymous donation of 3 lakhs, amount applied for the purpose of the hospital of the trust. The trust has accumulated 15 lakhs in the financial year 13-14 for a period of 5 years. The trust has spent 13.5 for this till 31st March 19. Compute the taxable income of the trust and the tax payable for the assessment year. Kindly take it as 20 and 14-15. Kindly take it as 20 and 14-15. 5 years gets over now. Kindly take this as 14-15 and this as 20, please. Just to recollect whatever we are discussing on the other day. I'm also working in lab. Let me work small amount only. Let me work in absolute values. So anonymous donation, which is taxable under 115 BBC, is going to be 2 lakhs. Is going to be 2 lakhs. Income taxable at normal rates. Do not forget it is 2,95,000. It is 2,95,000 plus 1 lakh. This 1 lakh is taxable at normal rate. Okay. 7250. That day itself, people answered. If you remember, our friend answered saying that date 87A and all is only for individuals. These entities cannot claim.
Sir, can you go little top?
Sure.
Okay.
And unfortunately, we cannot stop it here. We have to give an
Sir,
alternate.
how is the 7,250 computed, sir? Income taxable at normal
To,
rates.
to 3,95,000 minus 250 into 5%.
Okay.
1,45,000 into 5%.
Okay.
We cannot stop here, so we need to provide alternative solution for computation of tax, taking only 85% of anonymous donation taxable at normal rates. What will happen here is 2,95,000 plus 1 lakh into 85%.
Excuse me, sir.
Listening, sir.
Sir, a general doubt and trust.
Yeah.
Sir, an amount which is due but not received, we are reducing it after reducing the donations by 15%. Shouldn't we reduce that as like corpus donation? We are reducing total donations and then minusing 15%.
I got your point. In the subsequent year, you should
Okay.
spend 100% of that.
Okay, sir.
Because you have
Understood, sir.
already reduced that 15. First, you consider it as income,
Yeah.
reduce 15%. After that, you are not reducing 85%, you are reducing 100%.
Fully.
So, in the year of receipt and its subsequent year together, you should have spent 100%.
Understood, sir. Understood.
A public charitable trust providing relief for disabled person furnish the following: income from property held under trust, the income from business incidental to the main object, voluntary contribution from public, including corpus donation of 5 lakhs. The trust applied 20 lakhs for various activities and programs undertaken for the benefit of such people. The trust has also paid 10 lakhs towards a repayment of loan taken a year back for the purpose of construction of its center for training disabled persons. On the amount spent 20 lakhs, 50,000 was paid in cash on a single day to a particular person and 75,000 to a professional by way of account pay check without deducting tax at source. Determine the tax liability of the trust. Determine the tax liability of the trust.
Sir,
Listening.
sir, will the previous question be covered under 1023C?
No, I'll tell you. It will come. I'll tell you. We are going to
Okay.
do something. I'm doing it in absolute values. In examination, you can do it in lakhs. Is repayment of loan and application, friends? Is repayment of loan and application?
Yes, sir.
Yes.
Sir, I have doubt actually.
Go ahead, Hariharan.
Sir, if that in that business income, if it is not stated that the incidental to the main objects, will there be a different answer?
Okay, I can give you two things. Is business, if the question itself is, if business income is not incidental or is it incidental, does it make a difference? No. The business cannot be carried on or for a trust which is falling under general, up to 20% only it can be taken. Question is a very old question. Okay. First, okay, relief for disabled persons falls under the medical relief category and not object of general public utility. First point to understand. So they can carry on business here the total. Second point to understand is they have not given the receipt in the question. Income does not mean it is exactly receipt. Everywhere they have used the word net, net, net. Okay, so unless you can find out the gross receipts, 20% of gross receipts, don't do that. But in this case, it is falling under medical relief, so you need not test that 20% condition.
Okay, okay. Yeah.
If it is not falling, I'll give you the subsidiary answer also. If it is not falling under that 20% category, if it is not falling in that 20, I mean, if it is not falling as medical, it is the object of general public. The word incidental, not incidental is not going to make a difference. They cannot do business. Incidental ancillary does not make a difference. Okay, I'm leaving these small questions. Okay, should be an old question. Just I have ensured that it's there. So please leave that. 15th question. The following trust claim that anonymous donation received by them during the financial year are not taxable under section 115 BBC. A charitable trust referred to in section 11, which applied the entire anonymous donation for the purpose of the trust during the relevant financial year. They applied 100% of anonymous donation. They applied 100% of anonymous donation and they say it is exempt. Do you have a different answer, Subiksha? Not there. Kanish?
Yes, sir.
Yeah. Is it correct? Is the claim correct?
No,
No.
no, their claim is wrong, sir.
The claim is wrong. So what is the correct answer?
Sir, anonymous donations, whether if received only that 1 lakh or 5% of the total donation exemption is there, application is irrelevant.
Yeah, but ஒரே ஒரு correction மாத்திரம் exemption இல்ல அது. It is taxable at normal rates.
Normal rates, okay.
Okay.
Okay, sir.
So
Okay.
up to 1 lakh it is taxable or 5%, whichever is higher is taxable at normal rate. Remaining is taxable at that, and as he said, application is irrelevant. Stay on, Kanish. A trust which is registered wholly for religious purpose applied 75% of the anonymous donation for the purpose of the object of the trust during the relevant financial year.
The balance 10% alone is taxable,
That's
sir.
beautiful. So they can get anonymous donation up to 15% set apart. They should have utilized the 85%. They have utilized only 75%. The balance 10% will become taxable. The balance 10% will become taxable. Quickly write the answers for both these things. Quickly write the answers for 15.1. Okay, the claim is, the contention is not correct. The contention is not correct. I'll write the theory separately. You will find it in a news sheet. The contention is not correct. Okay, the contention is not correct. Okay, irrespective of its utilization, 5% of total donation or rupees 1 lakh, whichever is higher, is taxable at normal rates, irrespective of its utilization. 5% of total donation or rupees 1 lakh, whichever is higher, is taxable at normal rates, and the balance under section 115 BBC at 30%. And the balance under section 115 BBC at 30%. For 15.2, since it is a religious trust, 115 BBC is not applicable. You should communicate clearly why it is not. Since it is a religious trust, 115 BBC is not applicable. %85 of the income or receipt, 85% of the receipt should be utilized. 85% of the receipt should be utilized. 85% of the receipt should be utilized. Whereas only 75% is utilized. Whereas only 75% is utilized. Hence, the balance 10% becomes taxable at normal rates. Leading you to the 16th question. Leading you to the 16th question, Ramurthy Charitable Trust furnishes the following. Here is where I am coming. Income from an engineering college, gross receipts 100 lakhs. Okay. This will fall under section 10 subsection 23C, and this 10 lakhs is wholly exempt. Here, they are not looking into 85% that conditionalities are not highly. It is there as part of law, but there are enough exemptions for them. So, from our examination perspective, if the gross receipt has not exceeded 1 crore, up to 1 crore, so even if it is exactly 1 crore, provide the exemption. Okay, this 10 lakhs is, this part of the income is falling under section 10 subsection 23C. It will be fully exempt. It will be fully exempt, my dear friends. Fully exempt. It will not go to the outer column. In the inner column itself, 10 lakhs less exemption under 1023C, 10 lakhs. Income from property held in trust, 26 lakhs. Out of this, 2 lakhs was received during the was not received during the year, and 2 lakhs was received only on the last day of the year. Net income from business, okay, held okay, 2 lakhs. Amount spent on free scholarship, meal, and medical relief. Repayment of loan taken for construction of health center. You are required to compute the taxable income of the trust for the assessment year. Assume that the option under is excised under section 11(1) of the act. The option excised na that amount not received and amount impracticable. அதுதான் ரெண்டு 11(1). 11(2) is conditional accumulation. 11(1) is impracticable to apply. I only received it in the last day. So I will write in my return itself, it is impracticable. So I will use it in the next year. That's what is option under 11(1). Advise how the tax liability could be minimized or reduced. First, go ahead and compute the total income. Only the total income, friends. Go ahead and compute the total income. I'm going to the answers. Let us not, for the next question, I'll take your answers. For this question, I'm directly going to the answers. $7,80,000.
Sir,
Raja?
sir, shouldn't that impracticable deduction should it not be given before setting up at 15%, sir?
Once more, your question.
No, sir. We have deducted impracticable the amount that is impracticable to be utilized because it is received on the last day. That we have reduced after setting up at 15%.
Yeah,
Should we
that's
not
what.
do it before doing it, sir?
Your question is, should I reduce it in this 26 lakhs
Yes,
itself? No, sir. The
yes.
format says it should be reduced here only. Next year, you should use the entire 2 lakhs. Suppose
Okay.
next year you use only 1,50,000, I will take 50,000 as income.
Okay. Will it not tantamount to claiming extra 15% benefits?
Yes, sir. Yes, sir. Yeah. Technically, they could have reduced it from income, but we interpret the law and reduce it here. No, I
Okay.
agree with you that if you go by cash basis of accounting, it should have ideally gone to the entire 2 lakh should have gone to the next
Correct.
year and not just
Correct.
if you are getting this year some 115% மாதிரி இருக்கு. Yeah,
Okay.
but we are taking the advantage. So 7,80,000 is our income. The way to reduce is this. Okay, assessee can come claim for conditional accumulation. That is, this amount is going to be set apart for capital activity. Application needs to be made only to 5/30 of the income, as the balance 250 is not taxable. So even in practical cases, I have seen people directly whatever their income they put it as conditional accumulation. No, they need not up to 250. They need not. They are unwantedly conditionally accumulating. So this can be the only solution available. Next question, my dear friends. It's a very good question. Um, it it came twice in the examination. The same question, probably with a small change in number. A public charitable trust registered under 12AA runs a hospital as well as a medical college. It furnishes the following information. Gross receipts from hospital 425 lakhs. Income from business incidental, okay, 2 lakhs. Voluntary contribution received 32 lakhs. It includes corpus donation of rupees 3 lakhs and anonymous donation of rupees 5 lakh. The voluntary contribution are included in the gross receipts above. Hospital operational expenses 105, which is not inclusive of capital expenditure and depreciation. Income from medical college solely for educational purposes 10 lakhs, whose gross receipts is only rupees 90 lakhs. This 10 lakhs is fully exempt. Since the gross receipt has not exceeded 100, it is fully exempt. Included in this 425 lakhs is 55 lakhs accrued but not received, and further 19 lakhs received only on the last day. The trust set apart 80 lakhs for acquiring a building to expand its hospital, but the amount was paid in December 2020 when the sale deed was registered. In June 19, the trust purchased and installed a computer of 28 lakhs, rate of depreciation now 40%. The trust incurred 35 lakhs towards purchase of laptop, computer and printers and repaid a loan of 15 lakhs taken earlier. Compute the total income of the trust in order to avail the maximum benefits as per law. Go ahead, give me the answer. Not more than 5 to 10 minutes, not more than that. And also compute the tax to get more clarity. Get more clarity. In one of the year's examination, they asked for the tax also in the same question. So also compute the tax. Vijay, you did not read that sentence, Vijay. That gross receipts include this donation. It's not apart from. If you read, voluntary contributions are included in gross receipts above.
Sorry, sir, I'm not getting it.
You're not understanding.
Uh-huh.
Third point, I'm reading Vijay, and that
Okay.
there is a note. Voluntary contributions are included in that.
Okay.
That 425 includes this 32.
Got it.
Yeah.
Got it, sir. Got it. So I should not add back 32.
Yeah,
Only 3
exactly.
and
You
5
are,
should be
you
adjusted.
should not treat that 32 separately. From
Okay, sir.
425, you have to reduce whatever you have reduced 3 and 5.
Okay. Okay, sir.
Total mistake irka parunga. Madhu, computation. Yes, Sanjana, good answer. Yes, Divya, good answer. Yes, sir. Yes, Hariharan. Kalagidinga, Lalita. Yes, Hariharan. Correct, Madhav. Um, like Kanish 20 lakhs only. Correct. Correct, Rahul. Point 0.15. 19.15, Kanish. So 19.15, my dear friends. Gross receipt is 425 minus 3 minus 5. Okay, so we are getting 417. Business income 2, 419 is my total. 15% set apart. Amount to be utilized and actually utilized gives me a total income of 19 lakh 15,000. 1915. So anonymous donation can be up to 1,60,000. I'm happy majority of you did it correctly, because you should take the entire 32 lakhs, 5% of total donation. So it can be 160 and the alternative answer. So this is the tax payable funds in the both the options. This this came as a question. Once again, the same question, my dear friends. May 2015 is the same. Okay, and once more it came as a question. Okay, November 16, we have we know the answer. It is after introduction of yoga. So I'm keeping in view that yoga is the present focus area and has been granted international recognition by UNO. An institutional called Hindustan Mahan, having yoga as its main object, was registered. For this purpose, the total receipt was 1035, which includes 26.5 as business activity. So 135 into okay, in this case, state with reason whether the institution will continue to retain charitable status and eligible for exemption. Yes, because there is no restriction on business income. What would have been the effect had the main object of the institution has been advancement of general public utility and it has received? There it is only restricted to 20%. 135 into 20%. 135 into 20%, I think, comes to 27, and it is below the specified limit. So in both the cases, the deduction is available. But as I told you, when this question came, there was one other provision, 25 lakhs. Okay, 20% or 25 lakhs. Okay, so at that time the answer was different. Now the answer is different. May 18 is also yoga. We'll go to the second question of May 18. Mati Charitable Trust registered following cash system of accounting. This wording is important to you because here income accrued but not received kudutha, they would not have accounted it. They would not have accounted it. Please remember, cash basis of accounting. Gross receipts 400. Gross receipts from college by name of Indian Arts College 180 lakhs. Okay, offering degree courses. So it is 180 lakhs, so taxable. Corpus donation by way of check and by way of cash.
Sir,
Yes, sir.
sir, in the previous question, like the trust applied for approval under 80G, is that has any relevance?
Yeah, I will come to that, sir. I need to come to administrative. Corpus donation by way of check 30 lakhs and by way of cash 5 lakhs. Anonymous donation 10 lakhs. The administrative expenses for hospital 220 and for college 100. Fees not yet realized from patients 2060 and for student 6,50,000. Both these things will not form part of this 400 and 180. மிஸ்டேக்கை நம்ம வந்து ஒரு அர்ஜென்சி எக்ஸாமினேஷன் ஐ கேன் அண்டர்ஸ்டாண்ட் இஸ் அ டென்ஷன் ப்ராசஸ் we will take 580 and reduce this 31 or 21 27.1, but actually these things should not be included because they are following cash basis. We should ignore adjustment number 6. We should ignore adjustment number 6. Depreciation on assets of the trust. The entire cost of the asset has been claimed as application, so I will not allow it as deduction. Acquired a building for 1,20,000 for expansion of hospital. Stamp value of the land and building on the date of registration was 140 lakhs. The trust gave donation of 25 lakhs to another trust having objects of charitable nature, but not similar to the object of the donor trust. Okay, I don't mind, it need not be having a similar, it should be registered and it should not be for the corpus of the trust. You can take a favorable assumption. You can take a favorable assumption and it should not be for the corpus of the trust. You are required to compute the total income of the trust and its income tax liability in such a manner that it can avail optimum benefit. No, the trust does not want to seek accumulation of income under section 11(2). First compute income, my dear friends. First compute income. Yes, Harihan. Without wasting time, I'm going into the answers. Friends, this time I'm showing you the answer as per suggested so that you are little clear about how the examination is answering such questions. Okay, I'm taking the answer of the suggested. Okay, so gross receipts 400 plus 180, 580 less 15% 87 493 amount applied on revenue account for hospital for college on capital account land and building. So 56 வருமா அப்படின்றது தான் the main question because I have purchased it at a price lesser than the fair market value, but we all know 56 is not applicable, okay, for a charitable trust, so it will not be appearing. That is, gift provision inadequate consideration will not apply. Donation to another trust allowable since the same is out of current year income even though the object of the trust are different. Only corpus donation are not permissible. Write this line in the examination. 25. So you will hit at 28 as the total income other than anonymous donation. Other than anonymous donation. And then the usual answers. This question, they have not even worked out the alternate answer. Okay, but I have seen that being worked out. Okay. 981 they say is the tax, and look at the notes they have written. That is where I want you to concentrate because they will state everything. They will state, you will find why these things, but they have stated. Okay, anonymous donation taxable at 30%, donation received 5% or a monetary limit, whichever is higher, and balance taxable at 30%. Where the cost of the asset is claimed, no deduction for depreciation would be allowed. Therefore, since cost of the asset has been claimed as application, no depreciation allowed. Corpus donation, whether received by way of check or cash, are not include in total income of the trust as it is registered under. So, for the recipient, no problem. Only for the donor, that 2,000, 10,000 limits are there. Since the trust follows cash basis of accounting, fees not realized from patient and student would not form part of gross reserve. Therefore, there is no requirement for that. Okay, the benefit of section 1023C is not available in respect as the grant has received 1 crore. இதெல்லாம் எழுதவே மாட்டோம், but look, they have answered. Okay, since corpus donation and anonymous donation indicated separately and the question does not mention that the same is included in the gross reserve, the solution has been worked out on the assumption that gross corpus donation and anonymous donation are not included in. எவ்வளவு notes, unwanted notes, I accept with you, but please take the obvious in the examination. Please take the obvious.
Sir, can you show the total income, sir?
Yeah, sure. $28.
Okay, sir.
I'll paste that answer here later. So that uniqueness of that question is the way they asked that it is a cash basis of accounting. Okay. Money Foundation runs a charitable trust registered under 12AA, running school for secondary and primary education. The following are the particulars. Gross receipts from students, 200 lakhs, which exceeds. Voluntary contribution, including anonymous donation, government grant, donation given towards corpus offered to a trust. So this will not be treated as application. This will not be treated as application because it is given with a direction. Whatever is your utilization should become other trust income. So it is given otherwise. Amount applied for the purpose of trust included in this is a sum of 5 lakhs being applied for the benefit of the founder of the trust. So you will not include it. The trust set apart 55 lakhs for acquiring a building to expand its school, but the amount was paid in December. Okay, loss brought forward 25 lakhs. Compute the total income of the trust in order to avail maximum exemption. So the same question we have applied done earlier also. One other adjustment. So as far as trust is concerned, that 5 or 8 marks will come to you in a platter. Okay, we can easily say that the questions are of same nature, same category. So miss not trust as a question. Okay, all these answers, since you know I am not working out in the class, okay, but you will have the answers. Messrs. Mahan Charitable Trust is running an educational institution with hostel facility. It is registered under 12A. Voluntary contribution. This includes corpus donation. Donation of 20 lakhs from Mr. Michael, a foreign donor, which was received on the last day of the year. So in the foreign donor, you should not get worried. It is received on the last day of the year. The question is May 19. So it is received in the last day of the year. So it will not be the 11/1 it will get the exemption. Salary paid to teachers and administrative staff. Other general expenses include grocery stores, 30,000 by cross the check. Cross the check is not acceptable. A land belonging to the trust is in a nearby village which was purchased 5 lakhs was sold for 10.5 lakh, and another adjacent land to the trust premises was purchased for 12 lakhs as the playground. I'm going to come to that capital gains computation. It is exempt. If you invest, it is exempt. If you invest, I'm going to just come to capital gains computation. If you invest, you can claim the exemption. 5 laptops costing 50,000 each were purchased during the year. The trust has accumulated 30 lakhs, okay, for construction of a school building. Amount spent so far is only 27 lakh. The project is completed with the savings in project cost. It is taxable. 2 additional rooms were constructed in the existing hostel. Okay, cost of construction is allowed. It made a corpus donation of 20 lakhs to another trust. So after that amendment, every question has a donation to another trust. Okay, support your answer with necessary working. I hope the class can work out this also. If you have a doubt, ask me. Otherwise, we will keep.
Sir, point G.
Point
Hello.
C. Other general expenses 10
No, sir. G. Point G.
G. 2 additional
G.
rooms measuring 1,500 square feet was constructed. So 1,500 into 1,200 should be taken as applications. Utilization. 1,500 square feet each, sir. Sorry, 3,000 into 1,200. Is that the question, Hariharan?
Yes, sir.
So it should be treated as utilization. Depreciation cannot be claimed.
Sir, capital gain, how it is actually not.
I'm coming to that, sir. I'll do that, sir. I'm exactly coming to that point. Okay. So, friends, when we wrote in the initial itself, I had written that capital gain. I will discuss it later. So, this is the point of discussion of capital gains.
Sir,
Yes.
sir, in that Mahan charitable trust, in that question, it was told like foreign donor. Foreign donor generally will not be having PAN or something. PAN will not be there. So whether that will be treated as
Sir,
anonymous
no, it will
donation.
not be treated as anonymous donation. Okay, for all foreign donors and for payment made to non-resident, that PAN is not mandatory. They have to give something known as their income tax proof of that country. Don't take it as anonymous donation. The intention of that provision is it is donated on the last date.
Okay. Sir.
Treatment of capital gains or taxation of capital gains. Mode of computation is in the normal way. That is full value of consideration, index the cost of acquisition, etc. If the trust invests the net consideration, then exemption can be availed. If the trust invests the net consideration, then, my dear friends, exemption can be availed. Okay, what you need to invest is not capital gains. 54 and all is not applicable here. If the trust invests the net consideration, then exemption can be availed. If only part of the net consideration is invested, then exemption will be okay. If only part of the net consideration is invested, then exemption will be cost of the new asset. Cost of the new asset, that is amount invested. You can even take it as amount invested minus cost of the old asset. Okay, minus cost of the old asset. Okay, and then the law says if LTCA, ICOA will be taken as cost of old asset. Cost of the new asset, that is amount invested minus cost of the old asset or indexed cost of acquisition of the old asset. This is the exemption. The entire net consideration should be invested. Otherwise, I will give you only a partial exemption, that is amount invested minus cost of the old asset will only be claimed as deduction. The balance capital gains is taxable at the special rate.
Sir, here in this case, we don't have time limit for investing, or if I'm not able to invest within the due date of filing, I invest in
That
right amount.
CGADS and all is not there, but here you have that 11.2 as an provision.
Okay.
You can apply still.
Okay, got it.
Sir, so you're meant to say section 54s are not at all applicable
Not
for
at all
trust?
applicable, sir.
Okay, sir.
Section 54 lame individual and HUF ne irukum, sir.
Okay, okay, sir.
I have a small example here in page number 254 for you. I have a small example. Okay. A trust holds a capital asset and the same was sold for 980. Expenses incurred 20. Okay. ICOA 6 lakhs. Explain the amount exempt if case A 960 is fully utilized, 9 lakhs is utilized, 7 lakhs is utilized, and 6 lakhs is utilized.
Sir, I'm not able to find the question in my book, sir.
It is not there in page 254. Capital gains போட்டு அது கீழே இருக்கும்.
Sir, my page numbers are different. I'm not able to find the question.
It is on page 254, sir.
Page
254.
Okay, sir. Okay. I got it.
full value of consideration up to one point it is the same, so let us do it one level alone. 9,80,000. Okay, less cost of transfer 20,000. So I get net consideration of 9,60,000. ICOA given in the question itself 6 lakhs. So my dear friends, we hit at gross LTCG. Gross LTCG is 3,60,000. Gross LTCG is 3,60,000 less exemption. In this case, in case A, entire 960 is invested. So entire 3,60,000 will be exempt and taxable LTCG will be nil. In this case, the entire 960, since the entire net consideration is invested, whole of CG is exempt. Whole of the capital gain is exempt. Since the entire net consideration is invested, whole of the capital gain is exempt. Okay. In this case, the entire capital gain is not invested. So amount exempt will be, okay, investment minus ICOA. Investment minus ICOA, my dear friends, it will be 9 lakhs minus 6 lakhs. 9 lakhs minus 6 lakhs. 9 lakhs is the amount invested, 6 lakhs, so remaining 3 lakhs. In this case, 7 lakhs minus 6 lakhs. Okay, and in the last case, 6 lakhs minus 6 lakhs. So absolutely there will not be any exemption. Okay, absolutely there will not be any exemption. So the taxable component. So it is all depend upon what amount you invest. What amount you invest. Normally, if wherever net consideration needs to be invested, if only part of the net consideration is invested, if in the case at only 9 lakhs is invested. For example, I am telling you how the formula will work is 9 lakhs, that is amount invested into gross LTCG 3,60,000 divided by net consideration of 9,60,000. So the gain of 3,37,500. The exemption will be 3,37,500 and not 3 lakhs. Normally, or wherever we saw net consideration not getting invested. Later also we are going to see that in non-resident taxation. Okay, the exemption will be amount invested into net consideration into gross LTCG divided by net. But here the formula is of exemption is investment minus ICOA. That is the amount you are getting the benefit. Okay, I take this time to just tell you why. Why is like this the provision? Because this 6 lakhs or whatever it is, before 6 lakhs, whatever may be the amount, you have already claimed it as utilization in some year. Very nice thinking by the lawmakers. This 6 lakhs, you have already claimed it as utilization in some year. Whatever you are investing more than 6 lakhs only, I will give you the exemption. Because this 6 lakhs is already claimed by you. Now you cannot say, sir, I am using 9 lakhs. No, you are not using 9 lakhs. In 1 year, when you invested some 450, which became 6 lakhs. When you invested, I gave the exemption for that quantum. Over and above, if you invest anything, I will. If you have invested the entire net consideration, I accept. But where you are investing only partial of your part of your net consideration, the lawmakers are very clear. It's a very intelligent provision in the law that you have already claimed some utilization. Over and above, if you use something only, that alone I will give you as an utilization. That's why this 360, that's why this 3 lakh, 1 lakh and nil is the exemption. Even though you have utilized 6 lakhs, but 6 lakhs, you have already claimed it. So now you are not claiming anything. That's the intention of the lawmakers. Concept of exit tax section 115 ED. Concept of exit tax section 115 ED. Concept of exit tax section 115 TD. So 115, now you know what we are coming to. We are also beautifully using a term called exit. We are using a term called exit. Sir, this is again a nice provision brought into law, the most essential provision that is brought into law. What happens if a trust is dissolved? Exit. That's what. What happens if a trust is dissolved? Or what happens if the 12AA registration which is provided, I'm yet to come to the administrative part, first complete the tax part, then come to administrative part. Okay. So what happens if the registration is cancelled? When will registration be cancelled? If you ask me, if the trust is not utilizing the funds properly, if the private beneficiaries or trustees, etc. Okay, and if the trust goes out of its object clause, okay, in all these cases, the registration is cancelled. We will come to that. Okay, the registration will get cancelled in it. If the trust's genuineness is under question, the registration will be cancelled. So, if the registration is cancelled, if there is a modification in the object clause which is not in line with the previous objects, if the trust amalgamates with another trust which is not a registered trust, I told you many people run multiple trusts, okay, right, and if the trust is dissolved. In these cases, what is the problem we foresee? Sir, you collected corpus donation. Now the tax I haven't taxed that. I allowed it to be accumulating in your balance sheet. I allowed it to be accumulating in your balance sheet, sir. You collected corpus donation. I allowed that money to be accumulated in your balance sheet. in the 15%, 15% every year I am allowing you, which you are building various things. Now suddenly you are saying that enough is enough, I am cancelling the trust. Pay tax for all those things which I provided to you. Pay tax for all those benefits which I provided to you. Then only you can exit. Then only you can exit. Okay? So, exit tax is payable when the trust is going to go out of existence due to various reasons. But sometimes it is in existence, but the registration is cancelled. Okay? In the following circumstances, exit tax becomes payable. Where the registration of the trust is cancelled by CIT, Commissioner of Income Tax, or PCIT, Principal Commissioner of Income Tax. Okay, where the registration of the trust is cancelled by CIT or PCIT. Why registration cancelled? We have it under 12A. Okay, we'll come to that. Where trust deed is modified in such a manner that the object undergoes a change from the previous objects. Where the trust amalgamates with another trust which is not registered under section 12AA. Where the trust is wound up and has not distributed its assets to another trust registered under section 12AA within specified time. 4 reasons because of which exit tax can come. Registration of the trust is cancelled. Object class modified in such a manner that the previous object is not carried on. Trust amalgamates with another trust which is not registered under 12AA. Trust has been wound up. I accept winding up, but distribute the asset to another trust registered under section 12AA. What is this exit tax? According to section 115 TD, exit tax is MMR, maximum marginal rate, which is 30% plus 37% plus 4%. Okay, exit tax is a maximum marginal rate. Okay, exit tax is payable on the accredited income. Exit tax is payable on the accredited or accumulated income. You can even call it as accumulated income. Nothing but the corpus donation received that 15% which you have set apart, etc. Exit tax is payable on accredited income. That is the accumulated income. Accredited income is equal to gross value of assets on the specified date minus liabilities pertaining to such assets. Simple as net worth. Accredited income is on the basis of balance sheet. Gross value of assets on the specified date minus liabilities pertaining to such assets. Assets. First, let me talk about assets. First, let me talk about assets. Give me 2-3 minutes. I'll be back. Just 2-3 minutes. Yep. Assets. For immovable property. For immovable property. Stamp value on the specified date or FMV, whichever is higher. I want to find out gross value of assets minus liabilities. So assets for immovable property, stamp value on the specified date. Other fixed assets, fair market value. For investment in listed securities, average rate on the specified date into number of securities held. Okay, so in the market, what is on that date? Lowest plus highest divided by 2 will give you the, on that trading date, what is the lowest, what is the highest, divided by 2 will give you the average rate on the specified date into securities held. For investment in unlisted securities, net worth, okay, net worth of the company divided by number of shares into shares held by the trust. For investment in unlisted securities, net worth of the company divided by total number of shares into shares held by the trust. The following assets will not be included. The following assets will not be included. Assets acquired out of agricultural income, which is exempt under section 10 subsection 1. We all know that is the only exemption they can claim. Other 10 sections are not applicable. So asset acquired out of agricultural income, which is exempt under section 10 subsection 1. Assets acquired before grant of exemption under section 12AA. Suppose friends, I started the trust in 2009-10, whereas I get the exemption only from, let us take 14-15 onwards, only I get the exemption. Any asset acquired between 9-10 to 14-15 is out of the taxable income only. They would have paid the tax and then only got the asset. So, any asset acquired before the grant of exemption should be taken. Only those liabilities which pertain to assets which are included in the gross assets can be reduced. Okay, only those liabilities. So if there is a liability against asset acquired out of agricultural income, that cannot be reduced. That cannot be reduced. Only those similar to network working in our slum sales. Only external liability should be reduced. In other words, corpus funds, reserves and surplus are not to be reduced because these are not at all liability. This belongs to the owners. Any contingent provisions shall not be considered. Tax liability shall not be considered. Recently, read through the provision once.
Sir,
Yes, sir.
tax liability, why it should not be considered?
Sir, it is not an external liability. Sir. Tax liability is never an external liability. It is considered as part of owner's funds.
Okay, sir.
Sir,
Yes, sir.
sir, how tax liability will be there for the trust? There will not be tax liability at all.
Yes, sir. நம்ம இப்போ கூட ஒர்க் பண்ணோமே சார் இவ்வளோ கொஸ்டின்ஸ்லையும் if they have not used that 85%.
Okay, okay. I thought for that depreciation they won't be claiming, so
No,
fully
no.
they would be.
No, sir. This is if they have not worked 85%. Okay, friends. So this is how everywhere I have been using this word called specified date, specified date, specified date. What is that? In case of cancellation of registration, date of cancellation. Have it as two different columns, easy. That will not be a question, but still. The date of, in the case of modification of object, in the case of dissolution of trust, okay, trust is liable to distribute its assets within 12 months from the date of dissolution. Okay, I will give you 12 months. Distribute the assets to another trust. Distribute the asset to another trust. So specified date here is end of 12 months. Okay. If they have not, then it becomes taxable. Okay. I will give you 12 months. Within 12 months, distribute. Otherwise, I will tax it at the end of 12 months. So specified date will be end of 12 months. Other two are simple. Amalgamation. Okay, no, only 4 cases. Sorry.
Sir, in case of dissolution of trust, if they have not, it becomes taxable from dissolution, sir, or is it from the expiry of 12 months?
1 year they will wait, sir.
Yes, sir. After 1 year, they have failed to distribute. Then the taxability from will be from that date, or is it from
It is
the?
balance sheet based, sir. Let us not worry about from which date. On that date, whatever
Oh,
is the balance sheet amounts.
okay, fine, sir.
As soon as the provision was introduced, continuously there were 2 attempts of question, I believe. DVB Charitable Trust. Okay, it's an exam question. DVB Charitable Trust engaged in the activity of running charitable hospital and medical college since 8 years have been merged with a corporate hospital. The said corporate hospital is not eligible. The position of assets and liabilities of the trust on the given date are shares and securities held by the trust acquired out of agricultural income, book value of quoted shares and securities, market value, average of lowest and highest price of such shares as on the date of merger quoted is 40 lakhs. Book value of land and building held by the trust, value of immovable property as per valuation report, stamp value. The trust was created on 1st January and obtained registration on 31st March. So it was not acquired before that. The trust holds 40% equity shares in an unlisted company, and the financial position of the said unlisted company on the date of merger is as follows: book value of assets, fair market value of the assets, which needs to be taken, reserves and surplus, provision for taxation, total amount of equity. Liabilities, liability in respect of shares and securities unlisted, bank liability in respect of quoted shares, advance tax paid. Compare, compute actually it should be. Compute the tax liability, if any, arising out of the above merger, giving explanation of each item of treatment in the context of the relevant provision contained in the Act. Assume that the trust has no tax liability in respect of other activities undertaken during the previous year. Read through. The preliminary answer, I hope the class will write. When I say preliminary answer, I mean why it is coming under this provision of 115 TD, because it has merged with an corporate hospital which is not registered under 12 AA only. So such merger, so it means that it is dissolved. If I look at it, there is no external liability. Fair market value is 45 lakhs. All the three are internal liabilities only. Provision for taxation is not an external liability. Provision for taxation is not an external liability. So it comes to 45 lakhs and I hold 40%. Okay. Proportionate value of unlisted company. I hold 40%, my dear friends. I hold 40%. 98 lakhs is my gross assets value, less liabilities. Liability in respect of unlisted shares and securities, that is nothing but this one. That is nothing but this one. Okay, so it will not be allowed as a deduction. It will not be allowed as a deduction. Bank liability in respect of quoted shares, advance tax paid will also not be considered. Only bank liability, advance tax paid should not be considered here. It should be provision for tax.
Sir,
Yes, sir.
net asset value of unlisted company, we have a book value of assets other than immovable property also. Should you not take that into account
Once more,
in
sir.
the question? Uh, net asset value of the unlisted company. If you see like book value of assets other than immovable property, then fair value of. So should.
Sorry, sir. I didn't read that line properly. Friends, he is right, friends. I should have taken 45 plus 25. I should have taken 45 plus 25, my dear friends. I didn't read it properly. Net value of taking FMV of assets minus external liability. I should have taken 45. I read both as immovable property. I'm very sorry. I thought they have given book value and FMV. So it should be 70 lakhs, my dear friends. It should be 45 plus 25. It should be 45 times.
Sir, another doubt, sir.
Yeah.
Sir, liability of assets like securities you have given us agree income. They have given us unlisted shares. Can I assume that this
Yeah,
pertains to this?
you can assume. You can assume
Okay.
it so. Okay. You
Okay.
can assume it that it is for this equity unlisted shares. But here the
Okay.
wordings match. That's why I have taken it so. But you can have the alternative assumption going, sir.
Okay, sir. Thank you, sir.
So the rate, just for your purpose I'm writing 30% normal rate into 37%. Okay, somewhere around 42 it will come to. Again another 4%, so you will get 42.744%. 42.744%. One. Please give me a minute's time. Just look through the answer. I'll just come. Friends, one more question on this, which I missed to type. That's what I was searching. Okay, this is again November 2019 question. This is again November 2019 question. Okay, I'm reading it, my dear friends. I'm reading it. Okay, the registration granted under Section 12AA on 1/4/2009 to Messrs. Yes Charitable Trust was cancelled in this current year. Now you can take it as 20 on a finding that the trust was merged with another entity neither having similar object nor registered under 12AA. An appeal was prepared against the order of cancellation, which was dismissed. The order confirming the cancellation. The balance sheet on that date, capital fund creditors. Assets, land existing since 1/4/2008. The registration of the trust was on 1/4/2009. So this land is existing before. This land is existing before grant of exemption. Land and building purchased in the year 2015. This is relevant for us. 2000 equity shares of rupees 1000 each in Messrs. X Limited. Shares are listed in Bombay Stock Exchange. Balance in current account, FD account, cash in and TDS. Additional information. Stamp value of the land existing since 2008 was 120 lakhs, but if sold in the open market will fetch 250 lakhs. That information is just to confuse you. Please remember it is before grant of exemption, you should not take. Land and building purchased in 2015, if sold in the open market will fetch 1000 as per the registered value certificate, whereas the stamp value is 1050. The highest and lowest value was 1098 and 1051. So we will take the average into 2000 equity shares. On top of it, they say 2000 equity shares. We will take the average. Included is in the creditors is 30 lakhs provided on estimated basis for which no bills are received. Based on the above information, calculate the exit tax payable and state the latest date, 14 days is the time, okay, on which the tax has to be paid. Same like all 115s are 14 days. Within 14 days, you have to pay the tax, okay. So that is the let me directly go to the answer also so that we are very clear. Upper rate வந்து surcharge 12% அப்போ. Okay. So for this land purchased in 2008, okay, please leave it. Okay, they have taken it in a different basis, given the alternative answer in a different basis. I will explain you what is that different basis also when I am doing the registration, but you please leave it. Okay, valuation of land on immovable property 10 lakh 50 or 1 crore 5 lakhs or whatever it is. Okay, they have taken it. Okay, shares unquoted, the average price into the number of shares, balance in current account, balance in FD, cash in hand. Okay, total liability will not include capital fund, will not include contingent liability, and within 14 days you are supposed to pay the tax. Okay, why they have included this 25 lakh 2 crore 50 lakhs, you will understand it when I do the administrative provisions. You will understand, for they have made an assumption saying that since the registration is granted on 1/4/2009, even for 8/9 assessee can claim. Okay, that is how. Why? Because application should have been made in 8/9 for which registration is granted. However, an alternative assumption can be taken by the student. I will explain you why that administrative part, why they have taken this 250. But 250, I will always feel that the other way around. Okay, probably the examiner who set the exam paper and this person is different, because the purpose of giving that date is to ensure that you are giving the exemption or to ensure that you are understanding it clearly. But unfortunately, they have included, we are not going to include. Okay, and I will explain you why the inclusion and exclusion comes into play. But this is how this trust accredited income question comes. Last, இது வந்து both in new and in old the same question. The previous GVB charitable trust is also. So in the last two attempts, it is only accredited income which came into. It can be an accredited income question, or it can be a general computation question that can be asked in trust. But it will be a straightforward, simple question, never to miss trust question. It will, you will spend 1 hour, you will complete trust, learning the trust, and you can easily answer these questions. So you can see that they have not considered the asset also of income tax. Liability of income tax also, we know it will not be considered. It will not be considered. Okay, this is the old November, final old November 2019, but the same question came in the new paper also. Probably numbers might be slightly different, but the same question came in the new. The question from trust is going to be on exit tax or general computation for our November friends. For our May friends, I know what the question itself is. That is on the registration formalities, which has completely undergone a change. Which has completely undergone a change. I don't think we'll have sufficient time for administrative provisions. We will continue day after tomorrow morning with administrative provisions. Approximately 1 hour, and we answer all the theory questions and then move on to business restructuring as an area of study. That is amalgamation and demerger and its taxation. Okay, we will complete trust day after tomorrow, maximum 1 hour, but day after tomorrow, I will tell you about the new introduction of section 12AB for our May friends also, so that how this year, how next year it changes, two major changes in the provisions are there is now if you obtain a registration, it is lifelong. Okay, but in the new law, it is only valid for 5 years. That is, every 5 years you need to re-register. Now, there is nothing called the provisional registration. In the new law, initially when you apply, I give it only for first 3 years. Based upon your activities only, I am going to continue. So they have introduced section 12AB and the same provisions are replaced in section 1023C also. Okay, so I will tell you how that provisions, what is the existing provision, what is the new provision. Day after tomorrow morning, 6 o'clock. So day after tomorrow, we'll complete trust and move forward to reconstructions. All the best, friends.